Come on. How ridiculous. Now it started over again. So here we are in this world. Oops, pause. Okay. Going back to where we are now. In this world, what's happening? Kind of the opposite of what we were talking about before. Everyone on the planet wants short-term safety. And they're buying it. They're paying, let's say, they're paying so much for the safety. Remember, everyone's buying safe haven, which means prices go up when everyone's buying. What happens to yield? Well, you don't have to pay much of a yield to attract because buyers are already buying the safety. They don't give two hoots about the yield. They don't care about the yield. If you say, well, I'm not going to pay you any return, they're like, not a problem. Right? If you gave them 0.0001% yield, they're still going to buy your short-term note. Okay? So therefore, yields are way down because there's so much demand, and price rises on the demand. Nobody cares about the yield. The yield is zero on the short end. Yes, there is. It's not healthy, but there is. Okay? And then, nobody wants to make a long-term investment because nobody really knows what's going to happen long-term. Okay? Make sense? So therefore, the yield up here is much higher than down here because everyone wants this, and this is too risky because nobody knows what it's going to be like. And we're in a tricky, sticky situation. And I'd like to tell you it was easy to predict what's going to happen now, but no, there's too many odd, strange variables in the world today it's not textbook. But I tell you what, next time we get here, you got, let's say, somewhere between 6 and 18 months before it all crashes. Start getting up. Start getting up. Okay? Cash out of your stock and buy some bonds. Why? What if you were able to lock in, what is it, 6%? Okay. What if in 2007 you bought a 10-year at just about 6%? Every year you earned 6% and you took no risk. And you did that just before the stock market dropped 44%. How'd you do? You didn't lose a penny. In fact, you made 6% and you had no risk. Meanwhile, everybody else lost 44%. Now let's say you wanted to sell your 10-year bond a couple years later when the interest rate is way cheap. What if you wanted to sell it now? Do you think you could find someone to buy it so that they can earn the 6%? Do you think someone would buy that from you? You're like, yeah, I want to sell my 10-year T-note. I want to cash out early. Will somebody buy it? You would have no problem. You'd have people lining up to buy your bond at 6% when everything else is practically zero. Yeah, but they're going to have to pay for it, right? But that could happen. So, I'm by no means a genius. Oh, look at now it zooms in. Nice. Okay? But I want you to learn this the way I did So next time you could take advantage of it. Because I'll tell you what, when we were here, nobody took care of you except boot camp that I know of. The media didn't, right? The guys on TV didn't. The newspapers didn't. Your next door neighbor that made all that money in the stock market, all he could talk about is all the big investments. How about your other neighbor who bought 3 houses and he's like, oh man, it's so easy, I'm a multi-millionaire. Could you lend me $10? I'm just got some cash flow problems. But I own $2 million in real estate, even though I have a $25,000 income. Can you lend me some money? I'm just sort of tied up in some real estate deals. Oh, I'm a real estate developer. Remember when that was cool? Now I got real estate developers cleaning my toilet. It's a fact. Okay? No disrespect to real estate developers. It's just true. Maybe not cleaning my toilet, but digging holes in my yard and planting trees. I had a guy over here the other day. He was the lead builder for a 2,000 house community. Now he was lucky to make his truck payment. And he's doing, very low-paying work. I said, man, that must have sucked, because I know when you signed that deal, you went out and smoked a cigar and said to yourself, man, I finally made it. I've made it to the big time. My real estate development company just won the leading bid to build a 2,000 house community. Do you think that guy felt good when he signed that deal? Do you think he was thinking, set for life? Finally made it to the big time? Private island in the Caribbean, here I come? Do you think he said to himself, you know what? I think in 3 years I'll be scrounging around for coins at the bottom of my couch. Yeah, totally. Hey, Bowie. Boy, so here's the thing, guys. Nobody told him. How about when your stock portfolio dropped 44%? Did that piss you off? Or if you had a wealth manager at one of these funds. Have you guys listened to that interview I did on the radio? It's on the sound effects. By the way, the new website is now soundeffectsmanagement.com. Okay? So I talked about it there in the radio interview. I'm like, well, people with decent amount of money, like professionals, they hire a management team. So some MBA at a big name firm, he manages your wealth for you. What did he do? Nothing. But he called you and said, well, we're only down 20%. Ride it out. This is normal. Then a week later, no, we're only down 30%. This is normal. You're a long-term investor. You don't want to respond to market timing. Then he called you back at 40%. No, don't worry about it. We're near the bottom. Maybe you should double down. The reason he said that is he gets paid for the money that he manages, not for the money he makes. So if you say, you know what, maybe we should cash out. Yeah, but then he won't get paid. Who's going to make his Jaguar payments if you take your money out? So that guy failed you. All right? So the entire professional finance community failed you. And look how unbelievable. That's the part that just makes me angry. Angry. I get mad. I mean, deep down inside, it's so mad because it's so easy to predict and it's so easy to prepare for. And even if you're not sure how big the collapse is going to be, well, at least you can hedge. At least you can, do some options or futures trading to offset your losses. If you can't cash out of, Because, you know, if it's your retirement account, you can't really cash out, can you? But somebody should do something, right? I mean, something? What do you do if you're driving down the freeway and you see a car accident in front of you? You just close your eyes and keep going? Or do you kind of slow down and change lanes and try to protect yourself and make sure everything's cool? I mean, something, right? You close your eyes and ride out the storm. Why ride out the storm? Cash out of the stuff you can. Maybe buy some bonds. Maybe sell some S&P 500 futures. And it's not complicated. Like, do something. And yet the media, even today, they're like, oh, well, you know, I remember they had some guy on, they called it, you know, they gave him some sort of nickname, you know, the guy that called the market crash. I mean, dude, and, you know, a ninth grader could make that call. The fact that the entire professional community didn't make the call is absurd. So anyways, right in here, we cashed out of our equities, we cashed out of our house at the top of the market. That's what I did personally. That's it. It's not bragging. It's just it. I mean, look, the yield curve inverted. I had 6 months to 18 months to get the hell out, so I did. That's it. Hey Wayne, why'd you move to Georgia? Is there a inverted yield curve? What'd you do? Nothing. Oh, okay. And that's the conversation that I have with a lot of people. I used to be a real estate developer. Oh, really? I'm a currency trader. I have been for a while.